Learn how to trade options, stocks, and ETFs. My name is David Jaffe. I own beststockstrategy.com. I graduated from an Ivy League university, worked for 5 years as an investment banker, and have completed around $5 to $10 billion worth of transactions. And my goal is to help you. So the reality is that you're watching this video because you want to make money. So I'm going to try to keep things as simple as possible. So how to trade stock options, ETFs, and all the other stuff. The reality is that you should only be trading stock options and you should only be selling stock options. All right, so let's keep things simple. You want to sell naked options and you want to sell put options. Now, if you have a really tiny account, maybe instead of trading naked put options, you'll have to trade some vertical credit spreads. That's totally okay. I prefer naked options because it gives you the maximum amount of premium. It's very easy to roll and manage the position in the 5% of cases when the stock will actually fall below the strike price. And also, it inherently protects you from being greedy because it reduces your buying power, so you're not going to trade too many contracts. All right, so you're going to trade naked put options. That's how you're going to make money in the stock op. Next, what you want to do is you want to put together a watch list, and your watch list should have a maximum of 10 market leaders, right? That are very large companies that have a lot of liquidity. For example, Facebook, Amazon, Boeing, Lockheed Martin, Goldman Sachs, Activision. You know, you can use like Activision, TTWO, even though TTWO is a lot smaller. What else? I mean, PayPal is fine. I like that. You know, for Lockheed, you can also look at Raytheon. But that's pretty much it. You know, maybe you want to add like Visa. But really, the more securities that you add, the more risk that you're taking. Because I can tell you that the only ones that I would 100% always have a position in are Facebook, Amazon, Boeing, and Lockheed. That's pretty much it. I would say I have a position 80% of the time in Goldman. In one of the gaming stocks, I have a position maybe 50% of the time. I'd rarely ever have a position in Visa. But that's pretty much it. So the reality is that even if you have an account that's $100 million, you can make a shitload of money by just simply trading Facebook, Amazon, Boeing, and Lockheed Martin. That's it. That's 4 securities right there. And then maybe, you know, for the rest of the time, you'll have one position on, whether it's at Goldman or gaming stock or PayPal. So what we do is, Facebook right now is trading at around 175. We assess its trading range over the past 1 or 2 months, or, you know, just let's say like the past month or so. Over the past month, it's been trading like between 180 and 170. So we would then wait for Facebook to fall down to around 172. Then we would sell a naked put option for around $158. In exchange, we would collect around $1.20 a share. Therefore, our net amount of premium received, or rather our net break-even cost for this would be $156.80. But that doesn't really even come into factor because you're going to keep this $1.20 per share or $120 per contract literally like 98% of the time. So your break-even cost really doesn't matter. I don't even like factor that in when I make a trade. I know I don't take that much risk. Like all the people who tell you that trading naked options is inherently risky, I can tell you that there is never a situation where it's better to go long on stock than it is to sell a naked option. Never. Let's do, Amazon's been all over the place. Let's do Lockheed as an example. All right, so Lockheed has been trading at around 320 over the past few weeks. Its trading range has been 310, and then it's traded up to around 325. In this situation, what I would do is I would wait for Lockheed to fall to around 312. Then I would sell a naked put option on Lockheed Martin with a strike price of around 295. And I would sell it to make sure that it expires around 6 weeks in the future. In exchange, it would probably pay me around, I'd say around between $1.80 and $2.20. All right, so I would sell a strike at 290. Let's say, so right now Lockheed Martin is trading at 320. I would wait for it to fall to around 312. Then I would sell a naked put option with a strike of 295 that expires 6 weeks in the future. I would collect anywhere from 180 to 220. So let's say like $2 per contract. And that would pay me $2 rather per share. That would then pay me $200 per contract. And this trade will be profitable around 98% of the time. All right. The only bad thing with, now let's do Amazon as well. The only thing with Amazon is it's around a $2,000 stock. So with Amazon, I would actually trade a vertical because I want to reduce the buying power reduction. So Amazon right now it's trading at around 2,000. It's gone up a lot. So I would actually wait for Amazon. I know that over the past 2 weeks, it's gone up from like 1,800 to 2,000. So to be honest, I would wait for Amazon to fall to like 1,850. And then I would sell a put with a strike price of around 1,650 that expires around 6 weeks out. And then to reduce the buying power reduction, with the same expiration, I would actually buy a put option with a strike price of around 1,500. All right, that would probably pay me, let's say I'd probably get around $3.50 for this, maybe $4. And for this, I'd end up paying probably around $1.75. So I'd probably end up getting around $1.75 in net premium for this trade, and it would effectively, by selling a vertical, it would effectively turn Amazon into, instead of $1,650, it would turn it into a $150 stock. I don't like trading verticals, but in this Amazon situation, I would, just because there's so much buying power that's going to be used up by trading a naked option. When you sell a position with a $1,600 strike price, you can go to beststockstrategy.com and sign up and receive $400 worth of free training. Please like, share, subscribe, leave a comment. I respond to everyone. Once again, this is David Jaffe from beststockstrategy.com, and if you have any questions, I'm here to help you. Thank you.